Recording in progress.
Good afternoon, everyone. I welcome you all in our tax class, and I am C. Ankit Sharma, your income tax faculty for the session. As we have seen in our last class that we discussed about the basic concepts of income tax. I believe you must have gone through with the provisions, and of course, you must be enjoying the class as well. Today, we will be discussing the further provisions of chapter 1, that was basic concept. As in the last class, I have discussed that there are some rules, and please kindly follow those rules for the purpose of better understanding of the class. Fine. So there will be MCQ also today. There will be a story also today. And before that story and MCQ, there will be a thought for the day, which I usually share before every class. So let's see what is the thought for the day. Just a second. Okay. So here we go. This must relate to this course also, what you are pursuing, this course, Chartered Accountant course. And you can see this course also relates, this quote also relate with this course also. And it say do or do not, there is no try. So either you have to decide to follow or to complete this course, or either do not, of course. So there is no try. You have to decide it that I have to become a chartered accountant as soon as possible. Do not create a doubt upon your ability. This course is not about being intelligent or not. It is all about the hard work. So if you have decided to do your hard work, if you are decided to complete this course, if you decided to fix the prefix of CA before your name, then there is no one to stop you. So just believe in yourself, devote your time, sacrifice your desires, your party, etc. And just say this thing to you that you are going to be a chartered accountant. Later or sooner, it's a different thing, but you have to be a chartered accountant. So if you are not going to CA, CA is not going to leave you. So please believe on this thing that there is no try. If you have joined this course, now you have cleared foundation, now you are in this intermediate level, then I suggest you believe yourself that you have to complete it, you will complete it. Okay. So in the last class, we have discussed about the basic concepts. There are some chats. Good afternoon, Pallavi. Good afternoon, Hardik. Good afternoon, Pranav. Everyone, very, very good afternoon. So there are some issue. Who is saying this? Praveen is saying, so there is a small issue. There are two options to upload notes. One for uploading notes and assignment for, and second for uploading notes and assignment to revision session. This is the live session. This is not revision batch. So you have to download the notes, which is for live session, not for revision class. We are studying for assessment year 25-26 for May 2025 attempt. Okay. So let's start with share of notes, and then I will start some MCQ after discussing some basic concept. Okay. So there is some issue in YouTube. Just a second. Give me a minute, students. Just a second. This is okay. Good to go. Okay. Now, so we have discussed about the evolution of income tax. We have discussed the meaning of income tax, how it has been imposed, the types of taxes, that was direct tax and indirect taxes. then the constitution, how and why it was levied, the components of income tax, some definitions, overview. We have discussed the Finance Act, the circular notification, case laws. I believe that you must have gone through with these provision between last 2 days. Okay. Then we have the concept how to find out the gross total income, the total income, and the tax rate. And you have seen that there was multiple points like deduction, set off, clubbing, and I have told you that we are going to discuss those points in later chapters. We have detailed chapter regarding deduction, clubbing, etc. So we are going to discuss all these things in detail on later, one by one. The definition we have discussed about the person definition, in which we have discussed individual, Hindu, undivided family, company, and partnership firm. So now we are moving on the definition of association of person or body of individual. This is something we are going to discuss. Association of person or body of individuals. So what was association of person or body of individual? The definition says when person combined together for promotion of joint enterprises, they are accessible as an AOP. Let me give you an example, a very simple example. So you will be able to understand what is the exactly meaning of this thing. So suppose there are Mr. A, Mr. B, Mr. C, and Mr. D. They decided to start a business. They decided to start a business. And so they thought that we will start a business of career counseling. You understand the meaning of career counseling? That people will come to them and they will tell the people, the students or anyone else, that what career you should choose or opt. So those do not have any career, they start career counseling. Okay, joke apart. So they have decided to start a career counseling, and for that they will charge a fees, of course. That will be their revenue, a fees. Okay, but suppose they have decided that we will divide this profit in equal ratio, but they do not form a partnership firm, they do not form a company, they do not register this agreement anywhere. They do not register this agreement anywhere. So they might decide this verbally or they form an agreement, but they do not register this agreement anywhere. So if there is an organization, if there is a venture in which two or more persons are joined together for earning some income, the purpose, it is almost like a partnership firm, almost. But there is no registered agreement. So if there is no registered agreement and there is more than two or more than person who is the owner of that income, that will be treated as association of person under Income Tax Act. So if they have decided that we will register this as a partnership firm and registered this organization under Partnership Act, then it will called a partnership firm. Or if they decided to form a LLP lawfully, if they decided to form a company, etc., then they will be constituted or known as that partnership firm, LLP or company. But if they start doing a venture, start doing a business and do not register it anywhere, in that situation, they will be called association of persons. So if suppose this career counseling firm earn a net profit of 10 lakh rupees and they decided to distribute it equally, clear? But suppose what? There is no registered agreement. So income tax came to him, okay, fine, give us income tax. They said we are not registered. Then income tax will say we don't care. Even if you are not registered, we have a definition of association of person. For those entity, those are unregistered. So if there is any entity which is unregistered under income tax, that will be called association of person. तो हिंदी में अगर समझाया थोड़ा सा जाए तो ऐसे ऑर्गेनाइजेशन जिसमें दो या उससे ज्यादा लोग इंक्लूड हैं, दो या उससे ज्यादा लोग इंक्लूड हैं, लेकिन कोई रजिस्टर्ड एग्रीमेंट नहीं है, so they will be called association of person. I hope it's clear. Fine. Now we will discuss it with the help of the definition. It's a very simple definition now because I've explained you the meaning of it. So when the person combined together for promoting of joint enterprises, they are assembled as an partnership. So if they form as a partner, will form otherwise AOP. For a common correction would be chargeable. Fine. For example, you can restructuring activity other than is a partnership form. So they did not it. Whatever. Hello. Voice might be some little internet issue. Let me see. Okay, okay, just a second, just a second. I guess it will be fine. Okay. So we were discussing the provision. Let me see from voice was lacking. So was it clear when I was discussing association of person? Or you need me to again explain the association of person in short? So association of person means any organization where there are two or more persons joined together, but without any registered agreement. So if they do have a registered agreement, they will be called a partnership firm or LLP or company, depends upon which act they have registered themselves. But if they are not registered anywhere, they will be called association of person. Let me give you one more example. So that will clear things for you again. Very simple example, very simple. Suppose there is a temple, fine, unregistered temple. There are some temple, those are registered. Suppose there is a small temple which is unregistered, okay? And there are A, B, C, three priests are there. So whatever donation comes to this temple, suppose they receive 2 lakh rupees donation in this temple, but the temple is not registered anywhere. So the person who is donating is donor and they will be called co-donee. And because they are not registered anywhere, this temple is not registered anywhere, so this organization will be liable to tax as association of person. Same in case of legal heirs. Suppose there is Mr. A who has a property of 50 lakh rupees, and from that property the rental income is 10 lakh rupees, rent 10 lakh rupees per annum. After Mr. A, he has son 1, son 2, and D1 as a daughter. When Mr. A expired, they decided to share this rent equally, but they do not register this rental income under any act. They do not form HUF, they do not form partnership firm, they did not form company, etc. So what they will be called? They will again called association of person, because there is income and there are 2 or more person to uh, own this income, and it is unregistered, so it will be called an again association of person. Okay, now it will be clear, I guess. Moving on to the notes. So that the example of what says co-donee. So co-donee means the example I have given you for donor and co-donee. So it's a very simple, a single word definition. You can understand that if there is an unregistered organization, that will be an association of person. Now, what is BOI? That is body of individual. Let me give you an example of body of individuals also. Now suppose the same case, Mr. A having a house valued 50 lakh rupees, getting 10 lakh rupees per annum as rental income. Clear? Now suppose again he has 3 children, S1, S2 and D1. But now suppose they all are minor. They all are minors. So Mr. A decided that after my death, he asked Mr. B, C, D to be the caretaker of this property and the rental value. So he appointed Mr. B, C, D as a caretaker via will, a registered will. So Mr. A appointed B, C, D, the caretaker of this property, and in this will it has been written that whatever income they are receiving on behalf of his child, will be transferred to the children when they will attain the age of majority. When they will be 18 plus, this property will be transferred to S1, S2 and D1. Till that, they will be caretaker. Out of that income, they will give some money to S1, S2, D1 for their, of course, daily expenditure or monthly expenditure until they gain the majority. So in this situation, BCD will be called body of individuals. So whatever 10 lakh rupees BCD is receiving, they are not liable to pay tax on it by their own pocket. No, they will pay tax on this 10 lakh rupees income from this 10 lakh rupees only. So they are just the caretaker. They are not the owner of this income. They are just like a caretaker of that income and the property till the children achieve the age of majority. So they will pay tax on this 10 lakh rupees out of this 10 lakh rupees, not from their pocket. Of course, they will receive some kind of salary or some kind of remuneration for these activities. So whatever they will receive, that is going to be taxable by their own hands as an individual. But whatever income they are receiving in the nature of a caretaker, they will not be liable to pay tax on that income from their pockets. So if you will see now, what is the difference between AOP and BOI? I have given you the same example for AOP, this one, and almost same example for BOI. So if we need to find out the difference between AOP and BOI, so you can see first difference, AOP will be unregistered always. And BOI must have been registered because there must be a registered will. Under AOP, those person receiving income, they are technically the owner of that income. Clear? But under BOI, those are receiving the income, they are not owner, they are just caretaker. So they are technically the deemed assessee. The deemed assessee point we have discussed. So they are technically the deemed assessee for the income they are receiving because they are not the real assessee for that income. They are just the deemed assessee. So there is a question, almost they look like same AOP and BOI, but there are multiple differences. One more difference is AOP says association of person, and person means section 231. That means 8 individual HUF, etc. So under an AOP, there can be a partnership firm also, there can be a company also, there can be a HUF also, there can be an individual also. So they might four together can run a business without registration. So they can form an AOP. But under BOI, there can only be individuals can be there. Because caretaker cannot be an unnatural person. There must be an human being. So for body of individual, only individuals can be form a body of individual, but under AOP, any person can be a part of that association of person. Okay. Moving on to the notes. It denotes the status of person like executor. You must have heard about the executor when a company goes into the liquidation. So for that purpose, executors are appointed to liquidate the asset and to pay off the liability. So they are also the kind of caretaker of the asset of the company. They are not the owner. Or trustee who merely receive the income jointly and who may be accessible in like manner and to the same extent as the beneficiaries individually. So they are technically the beneficiaries, but they are not the real owner of that income. Okay. Thus, co-executor, co-trustee are accessible as a BOI. So you can go through the definition. Difference between AOP and BOI we have just discussed. You can go through with that. Now, local authority. So government, those department, those work on central level are called central government, like army, defense, etc. And government, those department, those work on state level, they are called generally state government, like state, UP police, etc. And government, those department, those work on local level, that means city level. That is called local authority, like Nagar Nigam, ADA, etc. Okay, municipality. So the term local authority means a municipal committee. So technically, local authority is just like a government body which works on city level, panchayat level, etc. District body, body of port, trust commissioner, or other authority legally entitled to or entrusted by the government with the control or management of a municipal or local fund. Okay. Now this local authorities, of course, are kind of a government department, so its all income has been exempted. Only one income is going to be taxable. That's the part of income exempted from tax, but we can discuss it over here only. A local authority is taxable. Only one income is taxable in respect of that part of income which arise from any business carried on by it insofar like this. Local authority taxable incomes. All other incomes are exempted. Only one income is taxable. It says if any local authority provides any services or commodities outside its jurisdiction. So every municipality, every local authority has its own jurisdiction. So if you stay in any city like Agra, like Delhi, like Kanpur, like Mumbai, etc., so they all have its own jurisdiction. So if they provide any services in its own jurisdiction and earning income from the customer or the person who lives in that jurisdiction, that is exempted. But if they provide any services or commodities outside its jurisdiction, that is going to be taxable, but except water and electricity. So technically we can say if there is a local authority, it provides outside jurisdiction water or electricity and earning any income, that is still exempt. Only if they are providing any services outside its jurisdiction except water and electricity, then it is that income is going to be taxed. So for example, suppose there is a municipal board of Mumbai, and if from any other city there is a requirement of construction of road, so Mumbai municipality department provides services outside Mumbai to that city for construction of road or services and charge something. That is its taxable income. But if even they provide electricity or water outside Mumbai jurisdiction, that will be still exempted. So you can learn like this. Only this point need to be learned. Any local authority outside its jurisdiction provided anything except water and electricity is going to be taxable. This has been, of course, discussed over here. In respect of that part of income which arise, any business carried on by it so far that income does not arrive from supply of a commodity or service within its own jurisdiction area. However, income arising from the supply of water electricity even outside the local authority is exempt. So only one is taxable, that is other than water electricity outside its jurisdiction. Clear? Next, what is artificial judicial person? So we have discussed almost 7% like individual, HUF, partnership firm, individual HUF partnership firm, company, local authority, LLP, AOP, BOI. An artificial judicial person says if any person who does not include in above category, will fall under this category. So if there is any person who earn any income, but if it does not include it in the above categories, then it will be treated as artificial judicial person. For example, God. How? It is possible. Any university, schools, if they are not partnership firm, company, etc. So if they are partnership firm, etc., then they will be going to be taxable under that definition of person. But if they do not register anywhere else, they have not included in the above 7 category, they will be called artificial judicial person. Universities, school, ICAI, etc. So I have told you there are two kinds of temple. One is unregistered. So in that unregistered temples means they will be treated as AOP. The donee, the person receiving the donation, co-donee will be treated as association of person. But if there is registered person, this is registered as a trust. So in that case, whatever comes into that temple, who is the real owner of that donation? Think about it technically. Whatever donation has been received by a temple, who is the real owner of that money? The God. But because God is an artificial person, he is not here and going to pay tax on its own. So on behalf of that, a trust has been created under various acts. So that is going to be taxable as an artificial judicial person because it is not a partnership firm, it's not an LLP, it's not a body of individual, etc. So we can say the last definition is included everything. So if there is any person who has not been included in above category, will be treated as association of, artificial judicial person. The definition also talks about it. It says artificial judicial person means are the entities which are not natural person but are separate entities in the eyes of the law. Clear? Now we have definition of India. You can go through it by yourself, of course. There is nothing to discuss in detail. The term India means you can go through it. Then the previous year and assessment year. I have discussed these terms in detail in the last class already. Previous year means generally the year in which you earn income. So the earning year is equivalent to previous year. And assessment year means in the year in which you pay tax on the income which has been earned in last year. So we have discussed this definition in detail in the last lecture. So you can go through with that lecture. Here we have examples. A is running a business. One more clarification about the previous year. It says it started from a day from when you start earning any income. What does it mean? Suppose any person, suppose Mr. A start doing job from 1st of July 2024. So he start earning income from 1st July 24. So for that income, the previous year will start from 1st July 24 till 31st March 25. So for a new source of income, the year of previous year will start from the day you start earning that income and it will end on 31st March of that financial year. But if there is an income which has been started or which has been earned for full year, then it will be start from 1st April, of course, 2024 and it will last till 31st March 25. So what I'm trying to explain that previous year could be less than 12 months. It could be less than 12 months or it could be equal to 12 months. But it cannot be exceeding 12 months. So it can be maximum 12 months or it could be less than 12 months. But an assessment year will always be 12 months. Even if in this case, the assessment year will be 25-26 And for this year income also, it will be 25, 26. Suppose, a very interesting example, suppose you start doing job on 30th March 2025. So your previous year will be for 2 days only, 30th March and 31st of March. But still your assessment year will be full 12 months, always. So previous year could be less than 12 months or equal to 12 months, but assessment year will always remain 12 months, not less, not more. Okay. So Mr. A is running a business from 1993 onwards. Determine the previous year for the assessment year 25-26. So you can see he was doing this business from 1993. So technically, the previous year will start from first day of April and ending on 31st of March. A chartered accountant set up his profession on 1st July 2024 on our CA day. Determine his previous year. So of course that will be from 1st July till 31st of March. So general rule. Now there are some exception of this rule. We have discussed in last class when we were discussing the definition of previous year and assessment year. After this previous year point, I will take your chat box queries or any query if it has been sent on query portal. अभी किसी ने पूछा क्वेरी पोर्टल पे, नितिन शर्मा इज आस्किंग सर जनवरी 1 2025 से अगर जॉब शुरू किया तो 1 जनवरी 2025 से लेकर 31 मार्च 2025 तक प्रीवियस ईयर रहेगा और उसके बाद का एक साल असेसमेंट ईयर है. सो आई हैव टोल्ड यू, अगर आप में से कोई भी अपनी क्वेरी हिंदी में मुझसे पूछना चाहता है तो मैं उसको उसका आंसर हिंदी में दे दूं. ओके, बाकी एवरीथिंग एल्स विल बी इन इंग्लिश. Yes, our story will be in Hindi from today because that is more interesting. So, okay. For previous year and assessment year, when we have discussed about it, so our previous year is 24-25. Our assessment year is 25-26. So we are talking in that is from 1st April 2024 and this duration will be end on 31st March 25. And after this assessment year will start, that is going to be start from 1st April 25 till 31st March 26. Okay. So now general rule is this, whatever you will earn in previous year. So we called it earning year also, that we have discussed. Previous year is equivalent to earning year. And assessment year is equal to taxing year. So whatever you will earn in 24-25, that is going to be taxable in next year. That is assessment year. This is the general rule. Okay, but now we are going to discuss some exception. Exception says there are some cases. Listen very carefully. These exceptions are exceptionally important for your examination. Till this point, we have discussed the basic things like introduction part, and it quite feel a certain time quite boring also because it's like definitions, basics. There is no interesting, no practical problem. But from now, from the starting of this exception, now you will feel that things are going to be interesting because now we have some different kind of situation. We have some different kind of provisions. So previous year tax need to be paid in assessment year, but there are some exceptions. Exception says there are some cases in which previous year income is liable or assessed to tax in same year. So that means those cases in which previous year equal to assessment year, we can say. So it's always difference. Generally previous year and assessment year are different. बट हम अब ऐसे केस पढ़ने जा रहे हैं जहां प्रीवियस ईयर की इनकम पर प्रीवियस ईयर में ही टैक्स देना पड़ेगा या उसका असेसमेंट प्रीवियस ईयर में ही करवाना पड़ेगा. सो दैट मींस प्रीवियस ईयर इज इक्विवेलेंट और गोइंग टू बी सेम एज असेसमेंट ईयर. नाउ यू माइट बी थिंकिंग व्हाई इट इज, हाउ इट इज, व्हाट इज द रीजन ऑफ डूइंग दिस. सो देयर आर सम लॉजिकल रीजन बिहाइंड इट. इट डज नॉट रिक्वायर दैट गवर्नमेंट इज नॉट troubling you. They do not intend to bother you. But there is some cases in which they have to do this. Why and how? Understand with the help of an example. Suppose there is Mr. A. So, okay, I am Mr. A. Okay, fine. Now, whatever income I have earned this year from 1st April 2024 till today is 7th October 2024. Suppose I have earned 10 lakh rupees till now this year. Suppose, right? So, and now I am leaving India permanently. Tomorrow I am going outside India permanently. I am shifting to USA. I have got a job over there. I have got some business opportunities, whatever it is, but I am leaving India and that is permanently leaving India. Tomorrow I have a flight. I am going to outside India, USA. So what happened tomorrow on 8th of October, I boarded into the flight and as my flight was about to take off, income tax department came. The officer came and he's saying, hello, hi, where are you going? I told him that I am going outside India permanently. So he said, where is my income tax? You have to pay income tax in India. I say, Arey, you didn't read properly, I guess. Did not take the virtual class. And the provision says the income of previous year is going to be taxed in next year, and that is assessment year. So whatever I have earned in this year, I will come next year, assessment year, and then I will pay tax. It's your provision. I don't know, and I didn't do anything. It is your provision. It is made by the act. The previous year income is going to be taxed in next year. So income tax officer says, oh, yes, correct. You are correct. You can go and you will come next year. I will wait for you at this airport. So I left the India and he was waiting and waiting and waiting and waiting. And of course, nobody is coming back to pay tax. And it is difficult. It's very difficult, almost impossible that that income tax department can recover that tax from that person from other country. That is practically impossible. So what will happen? That tax is never going to be paid. So you can see if in this situation, department follow the general rule, which says previous year tax need to be paid in next year. So what will happen? They might not able to collect 99% of tax of those person who are leaving India permanently in this year. If somebody is leaving for traveling purpose, so he or she will come back. So there is no issue. But if somebody is leaving India permanently, how you will come to know from visa? Okay. So if it happened, so government might lose their taxes. So they made an exception that if somebody is leaving India permanently, then they need to pay tax before leaving India. Either they need to pay tax in India or somebody else in India will take the responsibility that, okay, let him go, I will pay the tax on his behalf, etc. So either the tax need to be collected or there must be some kind of arrangement to recover that tax. So what are the exceptions? Technically, those are not exception, but those are the only cases in which government, if did not collect the tax in the previous year, so they might never going to collect that tax. So इस section का नाम हिंदी में कर सकते हैं, अभी नहीं तो कभी नहीं. So previous year tax need to be collected in the same year. So now we are going to discuss the cases, those cases, and in every case you will see there is a problem that if department won't recover tax in the same year, they might lose the tax. So, okay, before discussing this, let me see if there is any query. Okay. AOP was clear, okay. Okay, Nitish is asking, तो क्या unregistered partnership भी AOP में ही covered होगा? Unregistered partnership जैसा कोई word नहीं होता, unregistered organization जैसा word होगा, ठीक है? तो unregistered organization सारे where two or more person are there. If single person, it will be individual. So if there are more than two or more owner of any income, and if that organization is unregistered, it would be association of person. Clear? Okay. Next is Sir, for example, a municipality collect garbage from people and make money out of it, like biogas, may getting money in sale of waste plastic. So if that municipality is doing this in its own jurisdiction, then it is not going to be taxable. But if this work is municipality is doing outside from its own jurisdiction, then that is income is going to be taxable. Okay. Political parties are part of AJP, of course. Previous year for a company could be different, of course. That under Companies Act it could be different, but for the purpose of income tax, previous year will always be as explained. That would be same. So difference between provision and proviso, I have discussed this also in last class. Kindly go to the last lecture. I have discussed provisions are technically the act, and provisos are for explanation or for any detailed thing which need to be explained. Okay, Bhavana is asking, sir, if a new firm is established in December 2024 and income generate from January 2025, in such case for a firm, the day it is established will be the date from which the previous year will be assumed to be started. Real income does not matter, but the business registration date would be taken as the first day from the starting of a previous year. February 2024 Financial Act is applicable for which assessment year? For assessment February 2024, we are discussing that is assessment year 25-26. Okay, Praveen is asking something. Sir, kindly look at the screenshot for reference. This is not an assignment for live class, but free PDF of revision class are put in live classes. That's what I was asking in my previous message. Okay. Listen, Praveen, what happened? In my revisionary class, I mistakenly uploaded the notes of revision class into the normal live class. Okay. So you do not need to download those notes. Ignore those notes. I have uploaded the assessment year 25-26. The first page of my notes will be assessment year 25-26. That notes is relevant for your attempt. That is for assessment year 25-26. Those notes having the assessment year 24-25, kindly ignore that. Okay. Next. Sir, on behalf of who is asking? Vedyant. Okay. So on behalf of assessee, if somebody is paying tax, do they need to pay the tax in the previous year or assessment year? They need to pay tax on assessment year. If they are not covered under the exception, what we are going to discuss, if it's a normal case, they need to pay the tax in the assessment year. It's a universal rule. Only except for those exceptions we are going to read. In every cases, tax of previous year needs to pay in assessment year. AOP in children is minor. Minor is not allowed to make a contract. So if a minor is a part of AOP, he will not be considered as for purpose of contract. Their parents will be or the guardian would be considered as the member on his behalf. But that is not legally allowed technically. He's not liable to go into any contract, etc. Previous is shorter in the year in which we establish our business after April and winding up our business before March. In that case, previous year would be shorter. So previous year could be less than 12 months or it could be 12 months. So in your case, that in that situation, previous year will be shorter. Okay. So moving on to the exceptions now. So general rule, always previous year income is liable to assessed in the next year. That is your assessment year. Clear? But these are the exception. One exception I just discussed with you, person leaving India permanently. But we have total 5 exceptions. Let me see the query box. Nitish Sharma is asking, sir, जो पॉलिटिकल पार्टी को डोनेशन मिलता है वो भी टैक्सेबल है ना? इफ यस तो वो एओपी में आएंगे या बीओआई में या अदर? पॉलिटिकल पार्टी विल फॉर्म अंडर एजेपी. Fine, donation is exempted or taxable. That's a different case. That is going to be discussed in later chapter. But for now, they will form like an AJP because political party वही मानी जाती है जो registered होती है. They cannot be AOP, they cannot be BOI. Nitish Sharma, I guess I have cleared you that the notes which is shared on 4th October is relevant for your May 2025. In the starting of notes, there's caption will be assessment year 25-26. Only those notes are relevant. That's it. Okay. So now we are discussing one by one. First one is cases in which income of previous year is assessed in the same year. For exception of the rule, that income of previous year always taxed in assessment year. So first one is non-resident shipping business. So a non-resident who is carrying on a shipping business comes to India and earn income for that. Then before leaving India, he needs to pay income tax in India. He cannot leave India before paying the tax. He needs to pay tax before India, or he needs to make prescribed arrangement for paying such tax. So let me show you with the help of an example. So suppose this is Mr. G. He is a non-resident. What is non-resident? What is resident? That's a part of chapter number 2. That is residential status. That is going to be discussed later. For time being, those persons who reside outside India generally, they'll be called non-resident in India for the time being. Okay, detailed provision will be discussed in chapter number 2. So suppose Mr. G was a non-resident. He is doing a shipping business. Fine. So he comes to India and unload the goods, and for which he earns freight from India. Suppose the freight is 50 lakh rupees. Now, after receiving this income, he's going back outside India. Again, that happened. Income tax came. Income tax department says, please pay the tax on the income you have earned from India. He says, it's your general rule that the income of previous year needs to pay tax in next year. So I will pay tax in next year. And again, if it happened, you might not able to collect the tax. So government made the provision that in case of non-resident shipping business, if a person comes to India and earn income, then before leaving India, he needs to pay tax on it. How the profit will be arrived? Because for profit, he has to maintain a profit and loss account. He said, I will make a profit and loss account when I will reach back to my country. But government knows once he left India, we might not going to collect the tax. So government made a specific percentage. 7.5% of the income earned will be treated as net profit, on which tax need to be calculated, and it needs to paid before leaving India. Either you need to pay the tax or you made the arrangement. Arrangement means someone will take guarantee of that person that let him go, I will pay tax on behalf, and that person should be have some market value, etc. It's not possible that any auto rickshaw or any person who do not have any net worth, he is taking the responsibility. The responsible person must have some net worth on behalf of which government can allow him to leave, and the tax would be collected from that person. Clear? So a non-resident who is carrying on the business, in this case, please learn this percentage. It could be asked in the question in the MCQ. What is the percentage for the person who is running a non-resident shipping business for section 172? The point number 2 I have discussed, that was example when it appears to the AO that any, AO means assessing officer. Assessing officer means income tax officer. So we call him assessing officer in short. That any individual may leave India during the previous year, and the main condition is has no intention to came back. So if somebody is leaving India permanently, then this provision will be applicable. Then the total income of such individual of that previous year will be taxable in same year on actual or estimated basis. Clear? Example has been written over there. Suppose Mr. X is leaving India or USA on 10th June 2024. An assessing officer feels that he has no intention to return back. So what will happen? Mr. A may be asked to pay tax on the income earned during the previous year 24-25 as well on the total income earned during the previous 1/4/24 till 10th June 24. So he needs to pay the tax. Let me correct it. 23 and 24, the previous year, the last previous year. He needs to pay the tax on that previous year income in assessment year because it is the assessment year. And for the current year, he also need to pay the tax in the same year. So exception is for 1st April 2024 till 10th June 2024. The third case is assessment of AOP, BOI, AJP formed for a particular event or purpose under section 174A. So suppose if there is any music concert is going to be happened in India, any foreign singer, etc., is coming to India for any specific shows. Like he's going to have 4 shows in India, and after that he will go back outside India. So whatever income he or she will earn from India, that is going to be taxable in the same year. So for that event, if any AOP, BOI, AJP has been formed for that only particular event, and after that event, that AOP, BOI or AJP will be dissolved. Only it has been formed for that particular event. So in that case, the same case is there. If that person has been went outside India, then we might not able to collect the tax. So you can see in the all exceptions, there are only one common intention of the income tax department. That if you are not able to collect tax this time, that you might not able to collect the tax in future also. So exactly the same thing. If it appears to know the AO that any AOP, BOI, AJP is formed a particular event and will dissolve, if that is going to be dissolved in the same year. If it is not going to dissolve, then it won't happen. It is not applicable. In the year of formation, then their income will charge in the same year in which it is formed or earned income. Clear? Same point number 4. Now, point number 2 and 4 are almost same. Point number 2 was saying, if some person is leaving India and is not going to come back, so government would not be able to contact him. Government would not be able to collect tax from him. That's why government wants to collect the tax right now. But in point number 4, income tax thought it is also possible that some person even can avoid the tax, even if he's not leaving India, but he will stay in some other part of India, and we might not able to find him. How and why? Suppose there is Mr. A, there is always a Mr. A, and he has multiple properties like lands, buildings, jewelry, etc., etc. And he knows that he wants to sell these properties, and he knows that if he sell these properties, then he might have an income of almost 10 crore rupees. And for a general rule, we can say around 30% need to be paid as a tax. Suppose 3 crore rupees. So to avoid this tax, Mr. A is going to dissolve everything. He's going to sell this property in this previous year, building also, jewelry also. He's closing his bank accounts. He's closing his shares, or if he has any share or mutual fund, he's also going to redeem them. So if he's doing this, so he might have intention that he wants to avoid the tax. How? He will sell all these properties and he may not going outside India, but he can also go in any part of India from where it is very difficult from the income tax department to find him. Suppose he lives in Delhi. And to avoid tax, suppose this is not 10 crore now, suppose this is 50 crore and 30% is 15 crore. To avoid this tax, he left Delhi and went to Chennai. Or our country is so diversified, so big, so huge that if he going from this place to some another place, then it's really difficult for income tax department to find him because he is actually transferring everything, all bank account, jewelry, land, building, etc. So if somebody is doing this, if you close that bank account, if you transferring your property, if you transferring your land, all these informations is going to the income tax department. Suppose I am an income tax officer and I am seeing that Mr. A sold his property. If you are going to sell your property today, might be within 2 or 3 days, income tax department will come to know. I thought, okay, it's not a problem. He just transferred his land. So he has building, etc. also. So he will not going anywhere. After some days, I saw that he also transferred his building also. Okay. He also transferred jewelry. He also redeemed his share. He also going to close his bank account. So if this information is coming to me, so I might have a doubt that is Mr. A intention to avoid tax or he might be transferring these for some genuine reason. Of course, it's his property. He can transfer it or whatever he wants to do with it. He has whole right to do whatever he wants. And we are no one to stop him. But the problem is we need to know whether he is transferring these for normal purpose or he has some purpose to avoid tax. So now income tax assessing officer will see how as a general person I can also find it out that if somebody is transferring his all asset, then whether his intention is genuine or there is something else. Because if we transfer some asset, then generally we invest in some other asset. If you are going to transfer a building, land, etc., then you might going to purchase a new building for a residential purpose. Okay, if you are not going to have a residential house, you might going to have some property for tenant purpose. If you are transferring jewelry, etc., even if you receiving all your funds out of your bank account, so what you will do with all this cash amount? So there might a situation where department will think that there is something fishy. So assessing officer could see, in this case, the provision has been made that if assessing officer thinks that the intention is to avoid tax, then he might charge the tax in the same previous year. So it is depend upon the conditions on the basis of fact and condition, whether his intention is to avoid tax or not. It could be varied in case to case basis. Like not in other cases, like if you are dissolving, it's mandatory to pay tax. If you are leaving India permanently, you need to pay tax. If you are in the shipping business, you have to pay tax. But if point number fourth is there, then there is a option. If it appears to the AO that any person is likely to charge, sell, transfer his asset to avoid tax on his total income, then the total income of such individual of previous year shall be chargeable to tax in the same previous year. Now, the last case is discontinued business. Now, point number 3 for that business, for that BOI AOP, which has been formed and dissolved in the same year. After this point, I will take your verbal queries also. So let me finish this fifth point, then we will discuss that. Okay. The discontinued business case means where you are running a normal business or profession, where you are running a normal business or profession. And in this previous year, you want to shut it down. You are dissolving your company, partnership, firm, liquidation is in this year. So you are running a business from last 20 years. But in this year, you want to dissolve or discontinue that business. In that situation, the section 176 says, just a second. You need to pay tax just a second, students. In the same year. So it says where any business or profession discontinue in any previous year, the income from the start of the previous year up to date of such discontinuance may be assessed to tax in the same year. Any person discontinue any business or profession shall give assessing officer a notice of such discontinuance within 15 days. Why it is happening? Suppose there is a partnership firm, clear? And now that partnership firm going to dissolve in current year, in the same previous year. So whatever income that partnership firm has been earned in the previous year, if it has been said that we will going to charge the tax on that partnership firm income in the next year. So that year, the partnership firm has already been dissolved. Clear? Its office must have not been there. So we need to find out the partners, etc. So it would be really difficult that we need to collect the tax from the partner, etc. because we need to find them. So for that problem, you might not be able to collect the tax of that income. So in the normal businesses, whether it's a partnership firm, whether it's a company, in all these cases, if the business has been discontinued in the same previous year, in that situation, you have to pay tax in the same previous year. So previous year will be your assessment year in this case. You have to pay the tax in the same previous year in these cases. Clear? So these are the cases in which just a second. So in this case, we have to pay the tax. This is the exception of that rule in which we have to pay the previous year income tax in the same year. That is called your assessment year. So previous year and assessment year will be same in these 5 cases. Okay, so now you can ask your questions. Nadha Gopal, you want to ask something? Nanda Gopal, you want to ask something? Okay, let me take the chat box queries. So the fact is that the income tax cannot be shifted in the case of a person leaving India permanently. You said some other person can pay tax on behalf of the person. So this also falls under the exception. If somebody is leaving India permanently, then either he needs to pay the tax or someone else on his behalf. If ready to take his liability, then he or she needs to pay tax on that person who is leaving India. No, income tax cannot be shifted. This is the truth. The other person who took the responsibility of paying tax, why he will pay tax? Of course, the person who is leaving India will already paid him some money or might have given some asset. Out of that, he or she is going to pay the tax. Why I will take the responsibility of paying tax of anyone? Suppose my client is leaving India permanently and I took the responsibility that I'll pay the tax of that person. So I will not take the responsibility like this. He will pay the tax to me first, or he will surrender his asset to me. Then only I will take the responsibility. So I am just the person who is going to deposit the tax. Ultimately, he is the person who is going to bear that tax. No one in this country, no one in this world will take the liability of paying tax of someone else. Okay, it's not shifting out. No, it is just like a deemed assessee case that somebody else is going to deposit the tax to the government. The real burden of tax is upon that person who is who's leaving the India. Yeah, Shruti, correct. Local authority will not pay tax on his income except outside his not job, its jurisdiction. Okay, its area. Electricity and water, whether provided inside its area or outside, that is still exempted. So except water and electricity, if any municipality is providing any services outside its jurisdiction and earning income, that is going to be taxable. Shipping business of resident is taxable assessment here. Yes, that provision is only for non-resident because he does not reside here. Resident is here. Where he or she will go? We will collect the tax in the next year. In case of aeroplane, no, the tax will be paid in the next year. Only for shipping business, it has been framed. Shipping business, tax is not 7.5%, Aisha. Whatever freight you have earned, if you have earned 50 lakh, then 7.5% will be the considered as your income. Upon that income, we will apply the tax rate. Okay. Lady, sir, why can't our government find the person who left India permanently? Government can send notice if he does not pay tax on the due time. Do not ask this kind of query, please. Okay. What if the plant has been burned and the owner decided to discontinue? Is 15 days early notice required? From the day you are officially going to discontinue your business, you have to send the notice to the income tax department. It's mandatory. Burning of plant does not mean your business is discontinued. You have to officially dissolve, liquidate, etc. Okay. 7.5% will assume is his total income. Tax will be imposed on that amount. For example, if 1 crore rupees is the freight the shipping businessman has earned, then 7,50,000 will be treated as his income. Upon that, I will show you what tax is going to be charged in our second part of this basic concept. If you can't unmute, kindly send your query in your chat box. I am saying, can you explain fifth point in Hindi? ओके अगर आप कोई बिजनेस करते हो और बिजनेस आपका किसी इस प्रीवियस ईयर में बंद हो रहा है, ऑफिशियली बंद हो रहा है, तो जिस साल आप बिजनेस अपना डिसकंटिन्यू करते हैं, उसी साल उस वाले बिजनेस का सेम ईयर की इनकम का टैक्स सेम ईयर में डिपॉजिट करना पड़ेगा. एज सिंपल एज दैट. ओके. Income tax officer, how know that assessee is leaving India? When you go for visa, the visa department will inform the income tax department that some person is leaving India permanently. So they will come to know. Fine, these are not the part of our course. Okay. If in partnership dissolved, generally will that even be assessed in previous year? Yes. AO means assessing officer. I have already explained you are not focused in the class or you might join the class late. He'll take the responsibility, Pallavi. If some other person is take the responsibility to pay tax, then he or she can pay tax in assessment year. So Tani is asking, sir, what if AO realize later that the person leave India permanently and not paying tax? Then they'll start collecting the tax. It does not know they'll able to collect or not. Fine, but it won't be happen. At the time of visa, they will come to know automatically. कॉलेज एंड जॉइंट वेंचर कौन सी कैटेगरी में आएगा? अगर रजिस्टर्ड नहीं है यूपी तो यूपी में जाएगा. कॉलेजेस एजेपी होते हैं. So local bodies carried any business within jurisdiction. Within jurisdiction, everything is exempt. Only outside jurisdiction income is taxable, and that is also except water and electricity. If his income exceeding 7.5% does not matter, the rate has been fixed. Whether income is more or less, it does not matter. 7.5% will be treated as the income of that business. Shipping business tax rate, I will explain the tax rate. There is no different tax rate. Can Rihanna pay tax on income received in India? If that was AOP, BOI, AJP has been framed for her performance in India, then she might have paid tax, or that AOP, BOI, AJP might have paid tax if it has been dissolved in the same year. And if it is not, if the Reliance, etc., has taken the responsibility to pay the tax, then they can pay tax later. Okay. So in case of section 175 asset transfer, in huge amount tax is levied. If you thinks he avoiding tax. It depends upon case to case basis. If AO thinks that if there is some genuine reason of believing that the person is trying to avoid tax, that's why he's transferring all his asset. Generally, nobody do that. But if assessee has proven that he needs money for any kind of medical emergency, etc., in that situation, tax need to be paid in next year. But if it is not so, then assessing officer can ask him to pay tax in the same year. Okay. So, okay, moving on to further, we are about to complete the part 1. Now we have the second exception for undisclosed source of income. So one exception was that previous year income is going to be taxable in the next year. But there are 5 exceptions in which previous year income is going to be taxable in the same year. Now we have one more. Now there are some reason. One more provision we have discussed earlier, that previous year is equivalent to earning year. When I have discussed the definition in the last lecture about the previous year and assessment year. So we have discussed the previous year, we can say it is equivalent to earning year. Why? Because suppose Mr. A earned 1 crore rupees in previous year 24-25. Situation 1. Clear? And he disclosed all his income to the income tax department, 1 crore rupees in assessment year 25-26. He said that I have earned 1 crore rupees in previous year 24-25, on which I am ready to pay tax in assessment year 25-26. So if you are earning income in previous year and you disclose that income in next year, then in that situation, the previous year of that income and the earning year of that income is same, because income tax came to know about this income in assessment year, and you told department that I have earned this income in 24-25. So that will be called its previous year, and that is exactly its same earning year, because you have actually earned and actually disclosed to the income tax department that I have earned this income in the previous year 24-25. But there could be a situation. Now this is very interesting. Suppose Mr. A earned 1 crore rupees income in previous year 24-25. So of course earning year was 24-25, but in the next year assessment year 25-26, he disclosed to the department that I have only earned 60 lakh rupees in previous year 24-25. Now situations getting interesting. So assessee disclosed only 60 lakh rupees, but he actually earned 1 crore. But he said, I have already earned 60 lakh rupees in previous year 24-25. Now, very interesting thing. Department does not know this. You disclose 60 lakh. They assume that, okay, your declaration is correct. First of all, department accept whatever you say. Then after that, they will do their investigation. So first of all, whatever you will declare, they will accept it. So for assessment year 25-26, for 60 lakh rupees, previous year will be 24-25, and of course the earning year will also be the same. But now suppose what happened in previous year, after 2 or 3 years after investigation, department find out in previous year 27-28, department find out that on 40 lakh rupees you have not paid tax, which you earned in previous year or in the year 24-25. So now there's a problem. Government comes to know about this income in 27-28 because investigation will take time. So it's not possible that they will come to know in the same year. So income tax start investigation and they will come to know that you have escaped your 40 lakh rupees income. And when they find out that income in 27-28. So for this income, now previous year will be 27-28 because department comes to know in 27-28, but the earning year will remain 24-25. That is called black money, which you does not disclose. That is called black money. What you disclosed is called white money because on which you ready to pay tax. So 60 lakh was white money. So for 60 lakh rupees, technically earning year is equivalent to previous year. That means 24-25, 24-25. But for 40 lakh rupees, which is technically black money, now earning year is something else. It would be 24-25, but previous year will be that year in which department find that income. So now what was the general rule? That previous year, general rule is previous year equal to earning year. That is only applicable for those income which you have disclosed to the income tax department. You have disclosed. For black money, this rule is going to be break. For black money, always earning year and previous year will be different. Always it will happen. For black money, earning year and previous year will be always different. Always. So for white money, okay, suppose a third situation, let's take a third situation. Suppose Mr. A earned 1 crore rupees in previous year 24-25 and disclose only 60 lakh in assessment year 25-26. So for 60 lakh, previous year is equivalent to earning year. Clear? Now out of this 40 lakh, 30 lakh department find in previous year 27-28 and balance 10 lakh department find in previous year 30-31. So now for 30 lakh rupees, previous year will be 27-28 and earning year would be same 24-25. And for 10 lakh, previous year will be now 30-31, but earning year will remain 24-25. So whenever there is a black money, there was always the difference of previous year and earning year. For white money, for those money you have accepted, you have earned in previous year. In that case, previous year and earning year would be same, but in case of black money, it will always going to different. Okay, Hardik wants to ask something. We will discuss the case of black money. So if you have any question regarding that black money, that is going to be discussed. So you need to wait for it. If after those cases you have some question regarding the black money, in that case, we will discuss that question. So is child artist liable to pay Manisha? We have discussed that point also. He liable to pay tax with the help of his parents. Okay. When income is less than 2,50,000, we will discuss the rates of tax after this topic. In that situation, you will get your answer that income is liable to tax up to which level. In some cases, it's 2,50,000. In some cases, it's 3 lakh. In some cases, it's 5 lakh. Okay, so these are some cases. These are some cases in which earning year and previous year will be different. We have 6 cases and they are all same black money cases. In black money cases, always earning and previous year will be different. You can see cases when earning year and previous year is different. In case white money, they are always same. In case of black money, it is always different. Previous year and earning year different. We have 6 cases of black money. In these cases, the income will be treated as black money, and the previous year will be the year in which department find that income. And tax rate will be different. 78% tax rate is applicable in case of black money. That is going to be discussed later in this case. So it's like 3:54. So I guess we should take a short break, and when we will be back, there will be a story in Hindi for all of you, and then we will move on to the undisclosed income cases. So, Mr. Divya, can we go for a 10 minutes break? Welcome back, everyone. I believe you must have tea, coffee, etc. So now the story time, of course, and today is a very interesting story for all of you. Story will be in Hindi. तो एक गांव था और उस गांव में शहर से कुछ बच्चे घूमने आए उस गांव में। बच्चे नहीं, मतलब बड़े थोड़े से होशियार बच्चे, आप लोगों की तरह। तो सब गांव वालों ने बताया कि इस गांव में एक बहुत ही बड़े साधु रहते हैं, एक बड़े प्रीस्ट हैं, एक बड़े बाबा हैं, और वो बहुत ही कमाल है। उनके पास पावर है कि वो जब भी डांस करते हैं तो उस गांव में बारिश हो जाती है। उससे उस गांव में हमेशा एग्रीकल्चर प्रोडक्शन, फार्मिंग बहुत अच्छी होती है। तो सब उन बाबा को बहुत मानते थे कि ये बाबा बहुत ही कमाल के हैं, इनके पास पावर्स हैं और इसकी वजह से गांव में हमेशा रेन होती रहती। तो जो बच्चे थे बड़े होशियार थे, उन्होंने थोड़ा सा डायग्नोस किया, थोड़ा साइंटिफिक रिसर्च करी और नोटिस करा कि वो गांव एक बड़ी ही अच्छी हिल एरिया पर है और वहाँ वेदर ही ऐसा है कि हर 2-3 दिन में बारिश हो जाती है। उन्होंने कहा गांव वालों से कि आपके जो साधु हैं, बाबा हैं, वो झूठ बोलते हैं, ऐसा कोई पावर नहीं है, ये तो हम भी कर सकते हैं। तो उन्होंने वेदर रिपोर्ट चेक करी कि कल बारिश होने वाली है, तो उन्होंने कहा कल हम सबको दिखाएंगे कि यहाँ बारिश कैसे होती है, हम भी डांस करेंगे और बारिश हो जाएगी। सब गांव वालों को बुलाया अपने आस पास, सब गांव वाले आए, उन बाबा को भी बुलाया और फिर उन 4 लड़के थे, उन्होंने कहा कि अब देखो बारिश कराते हैं, हम डांस करेंगे। तो चारों ने डांस करना शुरू करा। आधा घंटा हुआ, 1 घंटा हुआ, बारिश नहीं हुई। एक थक कर बैठ गया, दो तीनों डांस करते रहे, 1.5 घंटा हुआ, 2 घंटे हुए, बारिश नहीं हुई। तो ऐसे करके 3-4 घंटे तक वो डांस करते रहे बट बारिश नहीं हुई। तो सब थक के बैठ गए। उन्होंने कहा अरे, हमें मैजिक नहीं आता, बट आपके बाबा भी करेंगे डांस तो भी बारिश नहीं होगी। तो ना बाबा से कहा डांस करने के लिए, तो बाबा ने फिर डांस करना शुरू करा। 1 घंटा, 2 घंटा, 3 घंटा, 4 घंटा डांस करते रहे और 5-6 घंटे बाद बारिश हो गई। सब गाँव वालों ने कहा देखा लड़कों, बाबा के पास पावर है और जब ये डांस करते हैं तो बारिश पक्का होती है। तो लड़कों ने कहा सच में ये तो कोई पावर है। तो वो गए बाबा के पास सॉरी बोलने। उन्होंने कहा बाबा कौन सी पावर है, इससे बारिश होती है? तो उन्होंने कहा मेरे पास पावर है डिटर्मिनेशन की, फोकस्ड। एंड मैं 2 बातें ध्यान रखता हूँ बारिश होने के लिए। कि पहली बात मैं ये मान लेता हूँ कि जब मैं डांस करूंगा तब बारिश होगी, ये मेरा बिलीव है। और दूसरा मेरी डिटर्मिनेशन है कि जब तक बारिश नहीं होगी मैं डांस करता ही रहूंगा। जब तक नहीं होगी, 5 घंटे, 6 घंटे, 10, 12, वो मेरा हार्ड वर्क है। तो टेक्निकली जैसे आज का हमने फर्स्ट डे, थॉट ऑफ द डे देखा था, डू और डू नॉट, नो, नथिंग इज लाइक ट्राई। So that was the determination. That's why I was trying to convey you that you have to be a CA. So either you will be a CA very soon and still it's not happening, still you are not going to leave this course. If you are not leaving CA, CA will not leave you. So you have to be that determined for your goal of your life that you will do it, whatever will happen. There may be failure. Failure, success is a part of life. सो किसी ने बताया कि मैक्सिमम लोग जो बहुत सक्सेसफुल हैं उनकी लाइफ में फेलियर्स भी बहुत सारे, बहुत सारे एग्जाम्पल हैं, आप देख सकते हो आसपास। सो नेवर फियर फॉर द फेलियर, बिकॉज इट्स द पाथ, इट्स द पार्ट ऑफ योर जर्नी, इट विल बी देयर, but you have to be determined that you will achieve your goal. Whatever will happen, you will face it, you will overcome it. So that is do or do not, there is no trial. So that was the today's story for all of you. Okay, somebody wants to ask something. Kambeshwari, you wants to ask something. Hardik wants to ask something. Okay, let's move on to the notes. So we were discussing the undisclosed income cases, or the cases in which previous year and earning year will be different. You can send your queries on the query portal or chat box, I guess. So cash credit. First case is the cash credit, where any sum is found credited in the books of an assessee maintained for any previous year. So if there is any entry in your books of account, it's very interesting. Generally, we thought that only if there is unexplained money is there. We thought that if there is 1 crore rupees in your house and you do not explain, you are not able to explain that what is the source of that money, only that is black money. That is also a black money case, but this is reverse case. If there is entry in your books of accounts and that sum is found credited, like 1 crore rupees receipt is there in your books of accounts, but you are not able to explain the source of that income, from where you earn that income, and you are not able to explain, or you are not able to prove that you have paid tax on it. So if any sum of money is found credited in the books of account as assessee maintained, and assessee has no explanation about the nature and source thereof, you are not able to explain that this amount received from which source, or the explanation offered by you is not satisfactory, or if you explain it or you give some explanation but assessing officer say no, you are not able to prove that, in that case, that entry amount, remember that entry amount would be treated as black. It's very interesting. So, example has been given. If any cash entry found in any register, book, copy, etc. with the assessee, and if assessee was not able to explain that, it can be treated as black money. I have also uploaded the chart of undisclosed income cases and the concept before this, section 172, etc. In that chart, there are some more example also. So you can go through the chart and you will understand these provisions more easily. Unexplained investment, if there are some investment has been found at the place of assessing. For example, income tax department came to your house and they found that there is 2 crore rupees investment in property registry paper has been found at your place, and you are the owner in that registry papers, but that property has not been shown in your books of accounts. The assessee has made investment, so there are proof of investment, like you have invested in property, land, etc., but which are not recorded in the books of account of the assessee. And assessee has no explanation about the nature and source of the investment, or not satisfactory. That is going to be your blank. Same. All provisions are same. If entry found, no explanation, blank. Investment found, no explanation, not recorded, blank. Third, now unexplained money, actual money has been found. Assessee is found the owner of any money, bullion, jewelry, or other valuable article, and such are not recorded in the books of accounts or no explanation. Again, that money, bullion, jewelry will be treated as your black. The fourth point, amount of investment, etc., not fully disclosed. Now, this is exactly same as per point number 2. So, point number 2 was saying investment not disclosed, but now this is not fully disclosed. Suppose there was investment of property papers has been found for 2 crore rupees, and you show that property value in your books of accounts is 50 lakh rupees. So the difference will be treated as the black. Here's example also, you can go through this very simple provision. Unexplained expenditure. So if you have made some expenditure, but it is not matching with your income. For example, I bought a car. Suppose I bought a car for 1 crore rupees. But my income which I has been declared to income tax department, the income tax return I am filing to the income tax department from last 10 years. According to that income, my total net worth is, suppose, 60 lakh rupees. So if I have 60 lakh rupees as per the documents I have submitted to the income tax department, but I have made an expenditure of 1 crore rupees. So how it is possible? If my capital is only 60 lakh rupees, then I cannot invest more than 60 lakh rupees. But I purchase a car expenditure of 1 crore rupees. So where the difference 40 lakh rupees I have given to that car company. So if you are no explanation, either you have taken a loan of 40 lakh rupees, so department will not do anything. But my capital shows to the income tax department that I have only 60 lakh rupees. But if I do some expenditure that is not matching with my income source or capital. So that excess would have been from the use of black money. So if you are doing any huge expenditure, you should see that it should be matching with your income. If it is not so, the difference between your black. The last case is amount borrowed or repaid on hundi. So hundi is what? Hundi is a negotiable instrument. It called parchi, etc. also, which is generally work in a local market. And because in this local market, on the basis of hundi, cash dealing has been done. And that cash belongs to the black money cash. So department wants to know that who is paying cash against those hundi. So to curb that, so to stop that, so to control that, government had made this provision, section 69D, and it says that where any amount borrowed or repaid on hundi. So if I have an hundi, how that work? Let me explain you. It's like a bill of exchange, local or vernacular bill of exchange. Generally, bill be discounted from BRBP from a bank, but this is discounted from a person who is the, you can say, a powerful person or a worthy person of that local market. So suppose this is a shoe market, and Mr. A is the uh, rich person, or you can say a reliable person or powerful person in this market. Now, Mr. B and C having a transaction between 5 lakh rupees. B sold goods to C on credit. And C said, I will pay you 5 lakh rupees after 90 days. But suppose now B have the requirement of fund right now. So he can go to Mr. A and he can ask, I need funds now. So can you give me funds against hundi? So B will write a hundi to Mr. A, or Mr. A will give a hundi to Mr. B for suppose 4,90,000 rupees. On the basis of that parchi or slip or that hundi, this amount can be recovered from any person of this market. So it's a kind of a check as we encashed our check or draft from a bank. So it's a Mr. is just like a bank. So if he will write on a paper and signed, then in that situation, that Mr. B can encash that parchi or that hundi from any person of the market for 4,90,000 rupees or some sort of commission. After a certain 90 days, etc., the person who is having that parchi or hundi will get rupees 5 lakh rupees from Mr. C. So it's just an example to make you understand what exactly a parchi or hundi is. So hundi is a kind of a negotiable instrument which is issued by a rich, wealthy and powerful person from a local market on which somebody can get money on some discounted price, and after on a certain time period that amount can be in cash from the person who actually purchased those goods, etc. The difference of commission is the earning which can be earned by any person. So in these kind of transaction, generally cash flow from one person to another person, and these are technically unrecorded cash. So department made this provision now that if any hundi has been issued, then it should be paid by only account pay check or draft. So the person who borrow or repay hundi, the same person we are talking, borrower or repayer, it's the same person. The borrower will be the repayer. So the person who borrow or repay that hundi, if borrow or repay on cash basis, then cash will be treated as black money. So in a simple language, we can say if there is a hundi, etc. is running in any market, then the payment should be made by account pay check or account pay bank draft. But if it has been not done with account pay check or draft, then the person who is borrowing or repaying that amount, I am borrowing and I am the repayer, same person we are talking, he needs to pay, the amount will be treated as his black money. He needs to pay tax on that, assuming that amount as a black money. So you can go through with that provision also. The special rate, In these undisclosed income, the tax rate is 60%. Upon that, there will be a surcharge of 25%. So that will make it 75% and 4% cess. So total effective rate is 78%, as I was saying earlier. No deduction, no allowances, no exemption, no basic exemption limit will be applicable in all above these cases. Okay, now concept of and definition of income. So you should go through with these provision. These are very basic provision and these are going to be discussed in detail in different chapter, like what is revenue receipt, what is capital receipt, regular receipt, casual receipt. They have separate chapters for casual income, capital gain, business head, etc. Net receipt versus gross receipt. Very simple provision. There's nothing technical. And you can see we will discuss these provision later in this chapter. It's already mentioned in your study material also. Concept of capital receipt will discuss in detail in the different chapter, etc. Now the definition of income, this is again, every point of this is going to be discussed in different chapters. Like first point is profit and gain, refer PGBP, dividend, income from other source, refer trust, refer salary. So all these clauses is going to be discussed in detail in different heads of income. You can just do one thing. You can just read those points. And I personally believe you are not able to understand those points because details of these points going to be discussed in different chapters. So when those chapters will be there, you will automatically understand these points. Okay. So that was the first concept. Now we will take the MCQ test and then we will move on to our second topic, which is rate of tax. This is my favorite quotation for all of you. Revise twice. That's my advice to make you wise. Whatever you read, just revise twice. If you are able to revise twice your chapters, your syllabus. Generally, students ask this question multiple times. How much hour we should study? How much time we should revise? So there is no standard timings for which you should read. For some student, they can complete a chapter in 2 hours. Some might be other take time for 4 hours. Somebody else need like 6 or 7 hours. So I cannot tell as a universal rule that how much hour you should study. A universal rule says that if you are able to revise your subject twice before 1 month of your examination in May 2025. So if you are able to complete up to 31st March 25 your subject and you have revised twice those subjects. So after 2-time revision, if you are left with 1 month, I promise you the probability of your success is more than 75%. So you have to at least revise every topic, every chapter twice before 1 month of your examination with practical problem also. Okay. So chat is disabled. I don't know why it is disabled. You can send your queries in the query box. That is more, I guess, easy way for me also to answer your queries, because in chat box, there are multiple good morning and these are chats are there, irrelevant chats are there. So might be they have been disabled, but you can send your queries on the query link. Earlier also, we were exactly answering all the question with the help of query link. Only from this year of classes, this chat box and audio has been activated, but might be there is some irrelevant chat. That's why it has been disabled. You can send me your queries on query portal. Why you need chat box? All students ask the queries on the query portal. You can send your queries in query portal. I will answer each and every query. Do not worry. Okay. Do not ask these kind of questions. Sir, there are few countries where no visa is required. What is this? Okay. Next is MCQ test. You can send your answer on the query portal. Whenever you send the answer, kindly mention the question number also. Okay. So let's start your test number 1. Before that, let me show you. This is the diagram for cash, credit, etc. Unexplained cash credit. And there are examples also. You can go through the example with this diagram. The notes have been uploaded with this diagram. So you can go through it. It will be really easy for you. Now let me start your first test. Test day 1 questions. Okay, so this is your test slide. The question number 1 is here. You can send me your answer on the query portal. Okay. Question number 1. We all discussed these questions. Kindly read the question yourself and send me your queries. I will answer that question after 30 seconds. Okay. So first question in front of you. If you want to give me the answer, kindly send over here. Okay, so question number 1, correct answer is, somebody has said, Pranav is saying C, Shruti is saying C, Astha is saying C, Afsal C, Tejaswani is C, Tambeshwari is saying B, Zaral D C, and Mrs. Rosalind Pradhan is B. The correct answer is C. Entry number 82 of Article 246 gives the Parliament to make law. You can go through the notes and it has been discussed in the notes. Well done. High five from Wi-Fi, those who have given the answer. The question number 2. Very simple question. Very simple. Kindly mention the question number whenever you are giving answer. Okay. Which list give power to both state and parliament? The correct answer is, of course, C, concurrent list. We have discussed that also. Well done, everyone. Question number 3. Read it and send me your answers on the query portal. Who is empowered to make rules for carrying out the purpose of the act? The correct answer is CBDT-B. Well done. Those who are giving correct answer, very well done. Pranav, very good. Adishri, very good. Bharat, very well done. Divya is correct. Afsal, it's not C, it's B. Okay. Dilip is B. Tejaswini is B. Well done. Balchandra C. No, wrong answer. Kishore Kumar, it's B. Well done. Next question. Read it carefully and then give me answer. Correct option, you have to give the answer of correct option. Question number 4. Okay, Miss Pooja S is saying B. Okay. Anyone else? Okay, Pranav is saying D. Tejaswin is saying D. Balchandra is saying D. Bharat D. Tejaswin, Zaral D. Divya Brajesh D. Dilip D. Very good. Raman. Aditya is saying A. Wrong. Astha D. Correct answer is D. Okay. Now this is interesting. Read it carefully and then answer. Which is not included in the definition of person. Question number 5. You have to answer. Okay, Pranav is saying D, Shruti is saying C, Adishri is saying C, Pallavi C, Dilip C, Tejaswini D, Nayan is saying C, Raman C, Pooja C. This is the only question in which we have more wrong answer than right one. Okay. Uh, Afsal is saying C. Mehak is saying C. Shibbu, Aisha, Kishore, Divya, Astha, all are saying C. Anirudh is also saying C. Ranjita C. Okay, the correct answer is D. It's not C. Now, why it's D? Because robot is including in artificial judicial person. How? As we discussed, artificial judicial person includes everything, or we can say everyone, technically. So artificial judicial person include everyone, including robot also. It includes God even. So there is no one who is outside the purview of the definition of person. Like you must have seen a movie that was entertainment, a dog who was the owner of a property. Suppose a dog is owner of a property, still it will be covered under the definition of artificial judicial person. So robot is also included. So even if any company is running by an AI technology or a robot, it will include taxability. That's why it will be part of A, J, and P. So the correct answer will be D. That is none. It's a tricky question. Next is sixth question. It's very simple for all of you. Maximum wave correct answer number C. Okay, Tejaswin. Sir, my name is Tejaswin. I am so sorry, Tejaswin Marva. It's very difficult to pronounce everyone name correctly. So I'm so sorry. It's Tejaswin. Okay. So which is the correct answer? Question number 6. It's very simple. We have discussed it today only. The correct answer is, of course, D, because assessment year will be always for 12 months. It's very good to see that a lot of students giving the answers actually. They are interacting with the portal. So this is the very good portal. Like Query Center is better than chat box. And of course, the verbal query also, because it's sometime your voice is not clear. Chat box is filled with multiple irrelevant messages also. So for a faculty, it's very difficult to find out the relevant chat box because it is like good mornings, multiple good mornings, and students are talking to each other. So it's very difficult to find us. This is pretty good. So we can take all the queries from query box and you are interacting with us. Well done. Correct answer is, of course, D. Assessment year always of 12 months because previous year always 12 months is not correct. It could be less than. Previous year always less than 12 months, it's also not correct. Assessment year can be less than 12 months, not correct. Only assessment year always of 12 months is a correct statement. Now, question number 7. Again, it's a very simple question. We have discussed today. The correct answer of question number 7 is C. Okay, question number 8. What is the correct answer of question number 8? We have discussed this question in this topic in last session. So I believe you must have remember the correct answer of question number 8. It is option number B. Question number 9 again, very simple. So it is charged on every person. Point number A is the correct answer. Which of the following is binding on both assessee and department? Question number 10. The correct answer is B. Notifications are binding on both. Circulars is only binding upon the department. Now these are calculation of tax. So these question will be discussed after the rate of tax provision. So we have discussed question till question number 10. From 11 till 15 question we will discuss after our second topic, which is going to be very interesting because now it start of practical question, the practical part of income tax. Till now we have generally discussed the basic rule, basic provision, etc. Okay. So moving on to this part 2 of the income tax. That is rates. So this is our part 2, which I was talking those topics which are related to practical problems. With these questions, we will also take illustration from study material, test your knowledge question, our MCQ, etc. So we have left with two topics. One was rate of taxes and the other is agricultural income. So income tax rate topic, and before that it's a beautiful quotation for all of you. Some are destined to succeed and some are determined to succeed. So we are the second one. Rates of tax, surcharge, and cess. So with the help of these three contents or components, we have to calculate the tax of an assessee, which could be an individual, HUF, etc. There are some rebate provision also, and there's a concept of marginal relief also. So technically rate, taxes, surcharge, and cess, including marginal relief and rebate. These five components technically teach us to calculate the final tax liability. So income tax is to be charged on every person at the rate prescribed for the year by the Annual Finance Act or the Income Tax Act 1961 or both. Miss Maroju, sir, are my messages reaching you? Yes, everyone messages are reaching me on query portal. So it's better if you have any query, you have any question, you can send those question and query on the query portal, right? So we have income tax and then we have surcharge also. What is surcharge? How it is need to be calculated? I will teach you. And then we have cess also. It's health and education cess on income tax. So health and education cess is technically on the income tax. So health and education cess will be imposed on the tax plus surcharge, if any. Here's a format also. I will teach you each thing one by one. Okay. It is 4%, a fixed rate. We have two tax regime in our country now. Regime means system. So we have two tax calculation system in our country now. One is called default tax regime and one is called optional tax regime. What is the difference? How to calculate tax under these regime? That one by one we will discuss. First of all, I will teach you the optional tax regime. We have the other one that is called default tax regime. So in the question, there's been mentioned that you have to calculate tax as per the default tax regime or optional tax regime. And the bad news is there can also ask for to calculate tax with both regime. So default tax regime is under section 115 BAC. And this is our optional tax regime, or we can say opting out. Opting out from 115 BAC. Opting out means when you do not want to taxed as per section 115 BAC. Now, optional tax regime says that in case of individual, HUF, AOP, BOI, and AJP. So we have discussed the provision of person. There were 8%. Out of those 8%, we have 1, 2, 3, 4, 5% having almost same rate of category. That is called slab rate of category. Slab rate of category. And we have multiple slab rate category for these individual HUF, AOP, BOI, and AJP. So it says if you are an individual, it has been categorized individual separately. So if you are an individual of more than 60 year, equal to or more than 60 year, but less than 80 year in previous year at any time in the previous year, you are called a senior citizen. So if you fall in this category, we have a separate rate of structure for you. For those individual more than equal to 60 year but less than 80 year in our previous year at any time, like from 1st April 2024 till 31st March 25. So during this duration, 25. During this duration, if you attain the age of more than or equal to 60 year or less than 80 year, you will be called a senior citizen. We are having separate rate for these kind of individual. So if you are a individual having 80 year or more age, if you are 60 year or more, but less than 80 year and a resident of India. What is the meaning of resident, non-resident? I have told you that we will discuss in chapter number 2. For the time being, resident means those person who having place in India, who have a residential place in India. Who reside in India. So if you are having an age of 60 year or more, but less than 80 year, and you are a resident, then we have separate rate of structure. If your age is 80 year or more, and you are resident in India, then we have separate rate of structure. And for other individuals, who are the other individuals? Except this category and except this category, the third one. So technically we can say other means less than 60 year of age at any time during the previous year. Resident. All non-resident. So if you are a non-resident, then age does not matter. Only resident age 60 year or more will fall in this category. More than 80 year will fall in this category. Less than 60 year resident will fall in this category, but a non-resident age does not matter. More than 60, less than 60, whatever age, they will fall in third category. All non-resident. And with them, all HUF, all AOP, all BOI, all AJP. They will fall in this third category. So individual having three category. Senior citizen resident having separate category. Super senior citizen having separate category. Other individual that will include all resident less than 60 year and all kind of non-resident more than 60, less than 60, does not matter. And with that, HUF, AOP, BOI, AJP, resident, non-resident, irrelevant. All will fall in this third category. What is the basic difference? If you belongs to first category, then up to rupees 3 lakh, up to your 3 lakh rupees total income is exempt from tax. So if you are a senior citizen, if my age is more than 60 year but less than 80 year, then up to 3 lakh rupees per annum. If I'm earning, suppose 4 lakh rupees income in this country, up to 3 lakh, I need not to pay any taxes. So those are senior citizen having the benefit of exemption of rupees 3 lakh. Clear? The basic difference. If you are having an age of 80 year or more and you are resident, it is called super senior citizen. Super senior. Because they are super senior citizen, more than 80 year, resident and earning income. So they got exemption, higher exemption. Up to 5 lakh rupees income is exempt. That's called basic exemption limit. So basic exemption limit For first category is 3 lakh. For second category, it's 5 lakh. And for third category, all person, whether you are this individual, whether you are this, whether you are this, whether you are HUF, POP, BOI, those have benefit of only 2,50,000 rupees exemption. I hope it's clear till now. So we have three categories. In case of individual, we have two individuals, and all other will fall in the third category. With individual, HUF also, AOP, BOI, AJP will form part of your third category. The basic difference is for senior citizen, the exemption is 3 lakh rupees. For super senior citizen, it's 5 lakh, and for all other, it's 2,50,000. For me, exemption is 250. For all of you, if you are having an age of less than 60 years, you all have exemption of 2,50,000. So if you are earning up to 2,50,000 rupees per annum, you not need to pay tax in India. Clear? We have the specific diagram also for this. Do not worry. This is the diagram in detail. You can understand. So there are three columns. The second column belongs to our first category. What we discuss in chart, this is our first. This is as per chart second, and this is as per chart 3. So first of all, I will discuss this for resident senior citizen, 60 year, male, female, or more, but less than 80 year. 3 lakh rupees exempted. First 3 lakh, they need not to pay any tax. After 3 lakh, if they have more than 3 lakh rupees income. So for next 2 lakh rupees, the rate of tax is 5%. Mentioned over here. This is the column of rate. So for senior citizen, up to 3 lakh is non-taxable. After that 3 lakh rupees, the next 2 lakh rupees is liable to tax at the rate of 5%. For example, if any citizen having 4 lakh rupees income, suppose 4 lakh rupees income. So how tax will be calculated up to this 4 lakh, first 3 lakh. Tax is nil. Now balance left is 1 lakh rupees. So next 2 lakh is liable to tax at the rate of 5%. So this 1 lakh is liable to tax at the rate of 5%. Tax will be only 5,000. It is simple mathematics. Income tax is not doing anything. Income tax just elaborated to the category. Other things are just normal mathematics. There is nothing which is complicated. You just need to remember the first rate. Okay. The first 3 lakh is exempted. Next 2 lakh is taxable at the rate of 2 lakh. And next 5 lakh rupees is going to be taxable at the rate of 20%. I will show you the example also. Abhi just let me read the rates. Fine. Do not get confused. I have a very simple trick to learn you all these rates and slab. Just after discussing this table, I will show you how to learn these rates. It's a very, very simple. So next 5 lakh, it's 20%. Balance is liable to 30%. For super senior citizen, first 5 lakh is exempted. Full 5 lakh exempted. There is no 2 lakh rupees limit. Next 5 lakh is liable to tax at the rate of 20% and balance is 30%. Do not get confused. Very simple trick. I will teach you. In just 5 minutes, you will learn all this table. We do not need to learn this table at all. I will show you how to learn all these provision at one go. For other category, first 250 is exempted. Next 250 is liable to tax at the rate 5%. Next 5 lakh at the rate of 20% and balance is 30%. Fine. I just need to show you the table. That's it. Now I will teach you how to learn it. It's very simple. Okay. Let me see if there is any query. Ms. Shruti Kumari is asking, why have two rates? No, we have multiple rates. Why have two regime? You should ask why are two regime. Government, we need to go to the finance minister, Mrs. Nirmala Sitharaman, and she can tell you why we have two rates. So in law, we cannot ask why. We have to follow it. As if you are driving a two-wheeler without a helmet, and if police caught you and claim a challan upon you, you cannot ask why should I pay challan? It's my scooter, it's my head. If I'll met with an accident, my parents is going to pay. Why you want me to wear a helmet? Can you ask that? No. So law means to need to follow. You cannot ask why in the law. Okay. But there's a reason behind it why there are two regimes, but we cannot explain it. And it is not going to be asked in your examination also. Okay, next is Apurva is asking, my messages are visible. Yes, your messages are visible. Apurva Das, tax is less for citizen. Yes, of course. Okay, slab limit. Okay, okay, okay. Person has a choice or by default. We have choice. We have choice to opt for a default tax regime or for a optional tax regime. You have a choice, of course. Fine. Which is more beneficial to you, you can opt it. Now let me show you how to remember the rate provision. It's very simple. Let me show you how. Okay. Suppose we have a money train, we have a income train. Just remember this. We have a income train, the train. Okay. Now the first station of this income train is 2,50,000. The first station of this income is 2,50,000. So if any income will fall this station, we have a specific exemption for it. Okay, sorry, not 2,50,000. We have first station is 5 lakh rupees. Our first income station is 5 lakh. And it says that if any income fall during this station, the tax rate would be applied 5%. We are discussing about the optional tax regime. Those table I have shown you, that exactly we were discussing. So income train, first platform is 5 lakh rupees. And if any income fall between this income platform, the rate of tax would be 5% going to be charged. How we will apply this? Just wait. Okay. The second station, this was my first station, up to 5 lakh rupees. If any income is going to be taxable, the rate would be 5%. The second station is for next 5 lakh rupees. So first 5 lakh rupees, the rate is 5. Next 5 lakh rupees, that means total income station is 10 lakh. So first 5 lakh, the rate is 5%. If any income fall between this station 1, between station 2, the rate of tax would be 20%. And if any income exceed this, the rate would be 30%. You just need to learn this. That first station is 5 lakh. If any income falls, taxability on this station, the rate would be 5%. The next station is for next 5 lakh rupees, the rate would be 20%. And then if it is exceeding 30%, exceeding 10 lakh rupees, the rate would be 30%. One thing you need to remember this. And the second thing, I explained you the basic exemption limit. So we know for senior citizen, those are resident, the exemption limit is 3 lakh rupees. For super senior citizen, those are resident, the limit was 5 lakh. For other individuals, HUF, AOP, BOI, for everyone, then the limit is 2,50,000. Just this. You just learn this, and this is a income table, income train. Now we can solve all questions of this slab rate with the help of only this. We do not need to learn that table also. How? Let me show you. Suppose question says there is Mr. A, aged 55 years. Always check the age and the residential status, and he is a resident. So he will fall in this category. Clear? And income earned by him is 9 lakh. Now question says calculate tax. Now I have made a machine for you over here. We just need to put the value over there and work has been done. Up to first 5 lakh, how much is basic exemption limit for this person? It is 3 lakh. So out of this 5 lakh, the 3 lakh is going to be exempted. Clear? So how much left out of this 5 lakh? The left with 2 lakh rupees. And what is the rate? If anything fall between this value, the rate would be 5%. That means the tax is 10,000. Now out of 9 lakh, up to 5 lakh, 3 lakh exempted and 2 lakh is taxable. So how much left for this next 5 lakh rupees? Out of 9 lakh, we have treated the 5 lakh rupees, 3 lakh exempted, 2 lakh taxable. How much is left? Simple mathematics, 4 lakh rupees. And what is the tax rate automatically in this slab? It's 20%. So that is 80,000. And 10 plus 80, my tax would be simple, 90,000. So example change, fine. Suppose Mr. B having income of 11 lakh rupees, age 85 year and resident. Now which category? This one? So in this case, now for this person, out of this 5 lakh, what is the basic exemption limit? The limit is 5 lakh. So up to 5 lakh, there is no tax because he is a super senior citizen. So this platform has been passed away without any tax. Now out of 11 lakh rupees, the balance 5 lakh will fall in this station category and the rate is 20%. So tax would be automatically 1 lakh. Out of this 11 lakh, 5 lakh exempted, 5 lakh fall here and more than 10 lakh, what is the value only? 1 lakh left. So that would be taxable at 30%. That means 30,000. So tax would be 1 lakh 30,000. So suppose in second example, this is Mr. C, age 85 year, and suppose it's a non-resident. So for non-resident, there is no benefit of super senior citizen or senior citizen. So it will fall in other category, where the exemption is only 2,50,000. So now if we will solve this now, so up to 5 lakh, 250 is basic exemption limit, no tax. Balance 250 is liable to tax at the rate 5%. So that would be 12,500. Over here, 5 lakh rupees at the rate 20%, tax would be same, 1 lakh. And more than 1 lakh is, of course, 30%, same rate, that is 30,000. So tax would be 1,42,500. So whether third example belongs to 85 year or it's HUF or it's AOP or it's BOI or it's AJP does not matter. Tax would be same. So we have multiple questions for this practice. Let me see if there is any query. Okay, correct. Well done. You understood all? Very nice. No query. So let me show you some example. So that would help you to solve this question. A special rate of tax. These are the tax rate for normal income. There are some income like capital gains, casual income, etc., on which special rate of tax will be imposed. That will be discussed later in the chapter. So do not worry about that right now. Okay. Now clarification, you can go through this. It's about how if someone birthday it's on, suppose we are working in financial year 24-25 and someone is going to attain the age of 60 year on 1st April 25. Our previous year is 24-25, that would end on 31st March 2025. And his 60th birthday is on 1st April 2025. So question arises on 31st March of 2025, he or she would be considered as a senior citizen or not. So we have the clarification and it says yes, on 1st, if birthday is fall on 1st April, on 31st March, we will assume that he will attain the age of 60 years. With example, the example has been given here. You can go through it. There is a rebate also. Rebate of 12,500 rupees or amount of tax, whichever is lower, if total income is less than or up to 5 lakh rupees. So whatever tax you will calculate under optional tax regime, if the total income is up to rupees 5 lakh, and this is only for individual and resident. This is not applicable for HUF, AOP, BOI, AJP. It is for only individual and resident. If there is income up to rupees 5 lakh, because you must have heard somewhere also that up to 5 lakh there is no tax. So that is a wrong interpretation of law. Up to 2 lakh rupee 50,000, there is basic exemption limit. But if the income is up to 5 lakh rupees, then whatever will be your tax or 12,500 rupees, the lower will be provided you as a rebate. Rebate means discount. It's a kind of a discount which you can claim from your tax. How? Let me show you. Okay, this is the calculation of tax format. We will discuss it after this example. Like if individual less than 60 years of age and resident, example given. Suppose income is 2,60,000. What would be the tax? Up to 250, no tax. And for 10,000, 5%. So tax will be 500 rupees. Total tax will be this one. Now, the rebate provision says if total income is less than or up to 5 lakh, then you can claim a rebate of 12,500 or the amount of tax whichever is lower. So in example, 12,500 will be fixed and tax is 500. So rebate will be 500. So there will be no tax. Up to the amount of tax or 12,500 fixed value, you can claim a rebate. Example 2, if your income is now 2,69,500, tax would be 975. Total is 975. Now rebate could be 12,500 or 975. It would be 975. Tax will be nil. Same in case of 3,50,000, the tax would be 5,000. Rebate would be 5,000 or 12,500. So tax would be nil. Up to 5 lakh we can claim it. Okay. Now up to 5 lakh rupees income, tax is 12,500. Rebate also 12,500 and tax also. So we can claim full rebate in this case. Up to 5 lakh, rebate can be claimed. But now in 6 lakh, rebate cannot claim. So if your income is 6 lakh, your tax would be 32,500. Now you cannot claim rebate because now the tax is upon 6 lakh. So up to 5 lakh rebate can be claimed if income is 5 lakh 1 rupees. Even then, rebate cannot be claimed. Okay. So in this case, rebate is not applicable. Again, with 270, you can claim the rebate. Same example for senior citizen, you can go through it. Same example for super senior citizen. They cannot claim rebate. Super senior citizen cannot claim rebate because rebate is available up to 5 lakh. Above that, no rebate. And for super senior citizen, basic exemption limit automatically is 5 lakh. So they need not to pay tax up to 5 lakh rupees. So there is no use of rebate because super senior citizen would pay tax only if the total income exceeding 5 lakh. As soon as income exceeding 5 lakh, rebate will be not applicable. Rebate will be provided before calculating cess. Now, what is cess? How it's applicable? I will show you. There are surcharge rates. We will discuss lot of surcharge, multiple surcharge rate. But before that, let me show you how to calculate tax format. Calculate tax as per the rates. Then rebate, we need to subtract. If it is applicable, we need to deduct it. Then we will apply surcharge, if applicable. Not in all cases applicable. Then the total, that means tax minus rebate plus surcharge. Whatever is the total, on that total we will apply cess. 4% in all cases. It's fixed 4% in all cases on this value. Now, this is my final tax. It should be rounded off into multiple of 10 rupees as per section 288. It has been written later also. So, tax and total income both must be rounded off in the multiple of 10 rupees. So, those are taxes question. The surcharge rate we will discuss with the help of a rate of surcharge chart. That was optional tax regime. The default tax regime is very simple. It has only one rate of taxes for everyone. No age problem, 60-year, 80-year, resident, non-resident. No, it's just a single option for all individual HUF, AOP, BOI, AJP. It does not matter whether you are a resident, you are a non-resident. It does not matter. It is only having one single slab rate. It's very simple. Up to 3 lakh rupees, the tax rate is nil. From 3 to 7 lakh, that means for next 4 lakh, you can also learn it like this. For next 4 lakh, the rate will be 5%. Then from 7 to 10, that means for next 3 lakh, the rate would be 10%. From 10 to 12, that means for next 2 lakh rupees, the rate would be 15%. Then from 12 to 15, that means from next 3 lakh rupees, the rate would be 20%. So the table is 5, 10, 15, 20, 30, and it's over here 3, 7, 10, 12, 15. So 3, 4, 3, 2, 3, sort of. So you have to learn this table at least. Fine. There's no money train because of single rates. You will learn it after solving 3, 4 questions. You will automatically learn all these rates. So now we will move on to some example for the rates. I guess there is, yes, we can apply. But we have the rebate also under section 115 BAC. For default tax regime also, we have a rate concept. Surcharge we will discuss from chart. Okay. The rebate provision for this, we will discuss later. Before that, we have a partnership firm rate. You can read it. It's simple 30%. And surcharge will be applicable 12% if exceeding 1 crore. We will discuss surcharge provision later. So I have discussed with you in detail the rate of individual HUF, AOP, BOI, AJP because those having slab rate of tax. But in case of partnership from LLP is a single rate and that is 30%. For example, if a partnership firm having 1 lakh rupees income, there is no exemption limit, direct 30% tax, 30,000. If a partnership firm having 1,000 rupees income, 30% tax, that means 300. So it's very simple, a single rate. Special rates will be discussed later. Marginal relief is a concept we will discuss later. Cooperative society rates on first 10,000 rate is 10%. Next 10,000 rate is 20%. Balance is 30%. Okay. You can go through with these rates. In domestic company, the rate is 25% if total turnover in previous year 20 to 23 is less than or equal to 400 crore. In other case, it's 30%. Just go through the rates because company tax calculation is not in your syllabus. You just need to learn the normal rates. Only the individual HUF, AOP, BOI, partnership firm calculation of tax in your syllabus. These will be discussed in final level. Fine. Foreign company, domestic company rates, you can go through it. We have rebate provisions for over here for default tax regime. For optional tax regime, the rebate provisions were very simple. It was 12,500 rupees or amount of tax, whichever is lower. For rebate under section 115 BAC, for default tax regime, the rebate says you can claim rebate if your total income does not exceed 7 lakh. Under optional tax regime, it was 5 lakh. Under default tax regime, the limit is 7 lakh. And the rebate will be the amount of tax, same, it's double, or 25,000, whichever is lower. That would be applicable if your income is up to 7 lakh rupees. There is a second concept also regarding the rebate that we will discuss in next session. In next session, we will discuss the rebate, the marginal relief concept, then the agricultural income, theoretical and practical provision, and then our test your knowledge question, illustration, etc. So before that, I really want you to please go through these rate of provision. So the next class, I will start with the illustration and example which has been given in your study material. Then we'll move on to rebate provision, margin relief, agricultural income, and integration provision of agricultural income. Before that, let me take the queries, then we will close the session. Mr. A console. Let me see. Okay, Mr. A, this question. Okay, it should be 65 here. I guess I solved it with like less than 55. It should be 65 here, like a senior citizen. Okay. So for senior citizen, the first 3 lakh would be exempted. Then 2 lakh would be liability tax at 5%, and then 20% for 4 lakh rupees. So the age I have just wrongly written, it was 65 years. Okay. You will going to solve these questions on tips actually after when we will practice some questions. These are very simple tables. You just need to remember the basic exemption limit and this income train. If you're able to remember this provision, you are able to solve all questions. Okay. Okay, yes, Shruti, it should be 65 here. I have wrongly taken it as a 55 here. Okay. Yes, Tanu, I was assuming it's 65 here, but I have written wrongly, it's 55. You are all right. Okay, so it should be 65. If it is 55 here, then we will apply the other provision like 2,50,000 rupees. Okay, it's clear now. Let me see, there's more queries. Just when it's really difficult that in the examination, the cooperative societies MCQ, I believe, should not be asked, I believe, but you should learn the basic rate also. If there's a question in MCQ regarding the domestic company, foreign company, or society, that would be a very easy question. That's why I was asking, just read the basic rate of structure. Like first 10,000 is 10%, next 10,000 is 20%, balance is 30%. Question will be based on only this much of provisions regarding the domestic company, foreign company, and trust society, etc. questions. Okay. So that was today's session. And day after tomorrow, we will have a last class of basic concept. And I always ask to everyone, kindly revise twice. This is my advice to make you wise. Please revise these provisions. So in the next class, when we'll start class, kindly have a paper, pen, and calculator also, because we are going to solve a multiple questions of tax calculation, etc. Okay. So, Mr. Divya, can we close the session now? Thank you.